Now, how the journey of MSME is evolved over a period of time. The micro, small, medium, and then we have a large corporation getting built through a mini or the tiny steps which is taken by the entrepreneurs in India. The pre-seeds in the sense are very risky, but you may typically have a bank credit facilities. Personal finance, most of the promoter try or rather entrepreneur bank upon their own personal fund. In case if they do not have, then they definitely go for a bank credits, the primary source. In case if they are into a specific sectors where the government grants are available, then the government grants, personal finance, government grants, bank credits, or in case the angel investors can also contribute if they are having a specific sector which is highly in terms of whether the angel investors are keen to participate, and they are mostly the angel investors participate in the sector which is driven by the technology based. And in case if there is a tech based platform, definitely the angel investors can bring in their capital prior to the growth story or prior to the initiating or during the startup phase or at a later stage also, that is early growth. We have also witnessed where after crossing a particular level of a threshold, the angel investors or in form of a private equity investors or a venture capital is coming in with the capital. This is a stage where company can think of or consider for going for an IPO. The reason is because at this stage, which is possibly a small to medium, that is, it is when they are crossing a particular threshold of a turnover. Depending upon the industry, depending upon the sector, the turnover which is achieved maybe 100 crore to 500 crore, 500 crore to 1000 crore is also an area or a bracket in which the company can consider going for initial public offering or for a small and medium scale IPOs, SME IPOs. So to initiate this, to ensure that we have a ample capital available for medium and small enterprises, the government has introduced a framework which is called as a relaxed framework for a SME listing, because if you look at the main board initiatives, the main board listing is slightly cumbersome as compared to a SME one, and therefore the norms for minimum operating profit, track record exemption, faster processing time and easy migration to a main board, these are the factors which have been introduced by the government, or rather the initiative of the government was to ensure that the hurdles with respect to the processing time, hurdles with respect to the meeting the minimum profitable track record are taken care. Therefore, right from the 2008, the government has initiated steps and have taken concrete steps with respect to building a SME platform. So 2008 till 2011, gradually various amendments have been incorporated in different regulations. SEBI ICDR regulation, or rather at that time the respective regulations of a SEBI framework for listing was amended. The stock exchange have amended their listing requirement. The norms for minimum profitability track record was curtailed, was removed, and they have allowed SME to get listed. It was initiated through the PMO office, and gradually the SEBI has been bringing all the guidelines, and circulars was introduced to frame the guidelines for a market making. Market making was not allowed earlier, but only for a SME sector, the market making efforts were initiated by SEBI by bringing the specific circular, changing the guidelines. The ICDR and amendment to the merchant banking regulation was incorporated. SME exchange, or a separate platform for SME, was introduced, and thereafter the BSE have started or came up with their norms, and then followed by the National Stock Exchange in 2011. And now we see a plethora of companies who have got listing on BSE or NSE. Both the BSE and NSE launched their respective platform to move aims to providing an opportunity to SME sector to raise the capital and have a less dependency on a debt or on other modes of financing. Both Bombay Stock Exchange and NSE have leveraged on their existing platform of a main board listing for a SME. So having an existing expertise to bring companies on board, they have leveraged the same for bringing or introducing the SME companies. If you see today, close to more than 5,000 companies are further going to get added in next couple of years under the SME platform. What is the main objective we see in terms of the overall SME or rather the conscious steps taken by the government to develop the healthy and the vibrant capital mode for small and medium sector was the access to equity capital easily and quickly. The reason is because the government felt that raising a capital may take sometimes 6 to 9 months or sometimes maybe an year for any company. However, any company who's initiating its steps for listing on either BSE or NSE, they can complete the process in 2 to 3 months time, which is a very efficient way to raise the capital. Sometimes even the bank or NBFC may take a longer time frame to provide a capital or rather the debt to the company for a growth as compared to the SME sector. Focused services to SME, both stock exchange have initiated or started their own platform. BSE Emerge, NSE Emerge and the BSE SME platform, both of them have taken the concrete steps, had a own team to support any new company who is coming out with the or who wish to do a fundraise coming out with the SME IPO. Similarly, new source of long-term capital that can be invested into the business, that is also because it's a capital which is going to be perpetual in the company, so it helps in bringing the growth for the company for next 3 to 5 years. So large size project or rather the project with a longer duration can be implemented with raising a capital on a SME platform. SME also allows an exit route to the investors in case if they have angel investors or a PE investors invested in the SME, the listing on either BSE or NSE helps them to have an exit opportunity. It offers liquidity. All of us are aware that liquidity to investors. It also builds an ability, an additional ability for any company to leverage and build, because the moment there is a growth capital in the company, the debt equity ratio of the company goes up, and therefore lenders will have more comfort to avail or to extend their lending ability, or rather the extending the loan will be more efficient because most of the information will be available in a public domain. Post listing, the company is expected to ensure a compliances with the regular disclosures as per the norms, like financial information, any kind of a change in the management, the board. They need to disseminate those information on a regular basis. That builds more comfort from the lending perspective. And the moment a company ensured a successful listing on a platform, it helps to mobilize more capital by way of other modes, which includes a funding from bank or NBFC also. Definitely, it helps in building a visibility. Continuous communication with the investor is one of the best way in which the visibility can be improved, and it can be improved significantly for any listed companies. On a quarter-on-quarter basis, the companies can come up with announcement, any kind of a development of a new product, new innovation, setting up of a new plant, change in the management will improve the visibility the moment company is communicating the same development to a stock exchange. A powerful incentive to employees. Any company which is listed on a stock exchange can come up with the employee stock option plans. ESOP or ESPS is the best way to retain the employee for a long term. By issuing the grants under the ESOP scheme helps company to build a team of a senior management, middle management or a junior management for a longer period. ESOP is one of the incentive, and pursuant to the ESOP, liquidating those options on the platform for stock exchange is more easier, and more preferred, and therefore ability to retain the employee goes up significantly for a SME company, SME listed companies.